saving.
So we're now recording. So do.
Okay. Yeah, I'm sorry. It's this one. Okay, so it's a DI index, and I marked some crosses and also some divergence there, which I think is a divergence. So I'm not sure. I've seen some. Maybe it's not the best one, but I've
So what is
seen.
this? This is a hourly analysis.
Yep.
All right. So all the DI is just a combination of a whole bunch of indicators all together, right? It's not really written in stone. What it's really trying to do is just amalgamate both volume and price momentum signals into one tool. The issue here is you're looking at this just off of one particular time frame. As you pointed out here, right? Probably not the best place to be a buyer. You got slammed here. The way I like to use the DI is trade location, then signs of divergence, and then structure, and then go. So you can use this as sort of your indicator tool. So if you saw this low end of the range, this high end of the range, price came down into here and then here, right? So that's definitely location. This point, on this particular candle, you look at the indicator, nothing really to get excited about. But here, nice little railroad tracks there. You've got both the indicator and the moving averages coming down. Nice breakout there. Then, if we look at this as the bottom end of the range, as the top end of the range, to rally back up into resistance. And here's actually a really good example, it looks like, of divergence. Because this actually was making a high here, right, on this candle. So as the market's working its way up into this peak, it's actually starting to fail a bit. Location looks good. Your indicator up near the upper end of its range, you could put overbought, oversold levels on here if you wanted to. What would be really cool would be to overlay 3 different time frames and see if you could get multiple signals all to fire at the same time. San actually put together, let's see if I can find it. It's one of these.
Yeah, this is sometime what I think I don't have, I didn't see enough examples, but I think sometime it comes first on one time frame and then another one, and sometimes the opposite way. There is no, maybe I'm mistaken, I'm not sure, but I'm in a cross or a tomb. It's not necessarily coming first on lower or higher time frame. It's really
You're missing part of my code here. That sucks.
yeah, quite a few versions.
Yeah, we've been doing this a while now. And really, if anything, Andrey, I wanted to give you this DI just as a template for you to be able to build, the indicators that you like to use most. And just give you the ability to play around with this index and sort of build it out the way that you'd like to see it. So it's not necessarily like this is a finished product. This has just been sort of the as far as
Lego.
I took the index.
Type of Lego, yeah.
Yeah, it's like Lego, yeah.
Do you daily? Do you use it daily, or because we never basically seen it on the launch? Because if you show divergence, or like I call it TRI Classic, I think the MACD, OBV, and Willy.
What I would do is I would
Basic, yeah, TRI Basic, I call it, which you like a preset, because in the launch you usually use them to show divergence or Willy or something. But in the daily trading, do you use the index, DI index?
There we go. This is what I was looking for.
Oh.
So this is if I'm not mistaken, and Sen set it up a certain way, but this has all three different time frames all on one, and then it gives you like a cumulative. So when you know, the daily turned up, you can see the 4 hour turned up, and then the hour turned up here. So as a result, at this point, everything's up. Then you can see the 2 hour turned down. So the daily and the hourly was still up, but because the 2 hour turned down, the indicator came down. So this is not a bad working example of how all of the sort of multiple time frames all can work together. But what I would suggest you do is well, let's see what we got here. Maybe this is it. Yeah, use them on different time frames like this.
Yeah, this I did that one. Yeah.
And I'm not looking for divergence. What I'm looking for is confluence of signals, if that makes sense. Think of the DI as like the ultimate indicator. Because it's got volume and price, and I might even include volatility indicators down the road. But in essence, it is a vote on momentum off of a particular time frame. Could we create better moving average systems? Like, because all this is like quite literally. 13 EMA crosses above 30 SMA buy signal. 13 EMA crosses below, crosses below 30 SMA sell signal. That's all it is. Part of this exercise was just to teach you how you can build algos on TradingView to give you a bullish and bearish sign, like this scoring system, using different tools. So all I'm suggesting here is I have found that when all three signals all spit up the same direction, it can be a very powerful signal. So, and I think in class we showed you, let's see if we can find a half decent one. We'll go here. So the way I recommend people use this, obviously off of the daily, that was a pretty big breakout there, right? If we sync this to all the charts and then go back and look. All right.
So you want to say you'd rather use it not as a more like some sort of alarm. What, like something is cooking, look inside, or vice versa, a final confirmation for like.
It is it's a very different way to trade. So, what I've taught you in the level 1 program was to be able to look at a chart use various different reasons to justify your actions: location, indicator, and structure. This is a very different way of trading. This is just trading purely off momentum. And in essence, here we'll go. So here we had daily buy signal spat up on this candle here. The 4-hour buy signal spat up here. And really all we're looking for is when did the 1 hour spit up a buy signal. And if all three of them are pointed in the same direction, then literally you just go with whatever breakout you can find on the chart off the particular level. So let's see if we can find that. Where the hell is it?
This is sort of what I first was thinking. It's sort of ultimate Davo sensor.
Okay, so since the hourly went bullish way over here, really what this is saying, right? So we'll put purple as hourly. So, you know, the interesting thing in this particular case is that the final signal to come in off of this reference right here was actually the 2 hour, right? The 1 hour's already went bullish off this double bottom here, right there, right? That's that signal there. You see that? So the 1 hours were bullish. The daily turned bullish right here on this candle here. So that's this candle right there. So all we are waiting for is just when will the 2 hour turn up. And it looks like the 2 hour and the daily basically turned up at the same time. So if you were going to use this as a trading system, I would basically say you're getting, and you know, I talked about this in class, quite often these DI signals, that when you get all three pointing in the same direction, they usually set up off of these wedges, right, where there's basically a consolidation in price. So you should have been able to look at this daily chart and just go, well, gee whiz, there's a double bottom breakout. I should be long from there, risking back below here. And all of the time frames of this just pure momentum signaling system, they were all bullish as of here, basically as of the breakout, right? There, the hourly went bullish here, 2 hour went bullish here, daily went here. If we take this line and extend it right across, notice that's the breakout on the 2 hour, and there is the breakout level on the 1 hour. So ironically enough, you know, really, we could be as algo hunters hunting any kind of reason to get long through here, but you could actually take the trade all the way up to this level here, the actual structural breakout level. But the point is that all the internal momentum signals are pointing up through here, so it shouldn't surprise us that you get this big pop in price. And that's really how I want you to use this. I don't necessarily want you to be thinking about divergences here. I think you're overcomplicating things. Now, if you could get a cumulative reading, then we could start hunting things like divergences. But TradingView can't do cumulative. This charting, and we'll have it on the new website. Maybe we might have gotten a bit of divergence through here. Do you see how the indicator made a low on this low here, price made a lower low here? But you notice that the indicator did not. Right? And you could even argue a really powerful divergence. Price did go to new lows there. Let's see. Oh, another way. Right, price indicator went lower there, right? And then price went lower here, but the indicator did not go lower there. I don't know whether you can see that or not. So I suppose you could use this to hunt divergences, but you know, especially off of something like the 1 hour, like your chart, I don't think this is an effective way to use it. Because what ends up happening here, especially with the indicator, is it acts very blocky, right? You see how it it moves very in block format. Whereas a lot of our classic sort of indicators, we want them to see a nice sort of rounded top on these. So as a result, I don't think the DI is really appropriate for hunting divergence. If you could get the multiple time frame and get it a bit smoother like this, then I think maybe that's doable. But on balance, I wouldn't be using it to hunt divergence. I don't know whether that helps or not, but yeah. If anything, you know, some of the guys last term were having fun. We created a system that spat up signals. Let me see if I can find it. Oh, it's been so long. How did I do that? No, it's Wayne's. Oh, Keith. Picture how we get that. I remember last term we actually created a really cool application of this sort of concept with using RSI and Willie. It was a lot of fun. You might want to play around with this, but I gotta find it first. Geez, I don't even see any of this stuff. No, it doesn't look like it's here. A whole bunch of weird stuff. That's too bad.
It's okay.
What did we call it? We called it as a name we gave it. Let's maybe go back and let's see. When were they still in pause? Maybe the middle of February. See what we got here. How long ago was that? I think this is a really cool application of screening tools. This is just simply asking what coins are above or below the 13 EMAs and whether they're bullish or bearish. But Benjamin ran this, but I don't know whether it's still working or not. We'll let that load and see if it comes up. That's another application. We gave it a special name too. It was like called the Keith special or the Wayne special. I just can't remember what we called it. What was that? Nope. 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 I gotta be in here somewhere. Can't remember what I called it. Wally LaBiz. Julian Daytrader. Actually, I think Julian created a really interesting script. No, this isn't. Did that load? No, didn't load. Oh well. Yeah, I'm striking out here. Sorry, Chief.
It's all right. I'll make a note. So maybe Julian. Maybe I'll ask Julian. Yeah.
Well, I wanted to show you just it was a really interesting take on how we can use these. We can use these, but I have to remember how long ago it was that I taught that. What is it? It's June right now, eh?
Mm-hmm.
So, when did you start the level 2?
Level 2.
Was it the winter time?
After New Year, yeah, late January, I think, or
It
middle
was,
January.
eh? It was into the New Year, so it must have been back here. Uh, so,
I think between 15th and 20th of January we started it.
yeah, so it should be somewhere back in here that we did it. Uh,
Bunch of unnamed stuff, yeah.
somewhere around here. Fine. Yeah. I wonder. Anyway, it was a really fun example of how we can use it. Maybe. Darn it. US appears.
I can't paste it. Save to keep notepad.
No, I don't see it here. It's too bad. Oh well. I'll ask the guys. It was a cool script that we created. I'll tell you, a lot of fun. Maybe it actually might be down in here.
How shall I ask it?
I don't know. Looking for. Oh, here it is. Key special. Yeah, here we go. Okay. So that was Sen's DI index. This is another cool application. This is asking if, in this particular case, we're using overbought and oversold indicators. So as a test, we've got the RSI in here. We also have the Willie in here. So we were sort of comparing the difference between the two. There's William percentage R right there. And then in the study itself, I think, what do we got? Out. Okay, so in this case, we have it set to the RSI and the RSI-MA. So what we've done in this study is if we oscillate to either overbought or oversold, you can see this is on the 15-minute, the hourly chart, and the 4-hour chart. It will give signals, lower time frame, medium time frame, higher time frame, if the moving average is above or below the indicator, right? Because we are using, in this particular case, we're going to use RSI out, and out 2 is the moving average for RSI. So our RSI moving average here. And the length that we have off of this is, looks like a 14 period. Out to RSI-MA. RSI-MA equals EMA RSI and length. So it must be like the 14 period moving average of the RSI, and RSI down, up, up, down. So length, yeah. Set to
So then you make a moving average on moving average, right?
Okay, so well, what this does, right, is if the lower time frame overbought oversold index is greater than zero, i.e., the index goes to 1 if it's bullish or 0 if it's bearish. I think that's fair. Thumbs up here. Lower time frame equals is greater than 0, then it gets a reading of 1, the thumb. If not, then a reading of 0. But you can see all the cumulative thumbs are going to be the lower time frame plus the medium time frame plus the higher time frame. So you'll get like a thumbs down reading if all indicators are pointing down. You'll get a thumbs up reading if all indicators are pointing up. And then you can see, you can actually plot when the thumb goes up, when the thumbs goes down. I don't have that. What I do have plotted here is a box on the screen. If the lower time frame is thumbs up, then it'll paint a green box. Medium term thumbs up, paint a green box. Long term thumbs up, paint a green box. If, however, they're down, then it'll paint a red box. So if you plot this, then what ends up happening is you get 3 different boxes. 1, 2, 3. So lower time frame, medium time frame, higher time frame. And when you get all 3 signals all pointing in the same direction, that will give you an alert. So it's kind of a fun tool to use if you just want to surf through the market looking for overbought and oversold conditions based on the multiple time frames. Works really well on these like altcoins if you're just surfing through and looking for trade ideas. So you can see at this point here, the market's saying, okay, everything is oversold. We can start hunting buying opportunities. I don't really have an overbought there. Let's go to those pod coins. That should be interesting. So you can see as the market was moving up, they're getting red warnings that things are getting a bit overbought. As the market's moving down, obviously it didn't give you perfect timing here. There's still quite a bit more to go. But this is just another way to visually represent when the market's overbought and oversold. Here's probably a really good example. So on the daily chart at this point here, everything has gone heavily oversold. So at this point, you can argue, okay, well, market's basically washed out. Now we're starting to look for buy signals. So that's another way to use indicator scripts. And then obviously when the market went nuts here, it shouldn't surprise us to start seeing lots of overbought sort of readings. So, and then same thing here, market goes nuts, getting overbought readings. Market really gets shitty here. I guess at this point, if we like drill down to the 1 hour, I think the best way to look at this is like off of like the 4 hour time frame. Maybe, yeah, let's go 4 hours. All right, so, on the rally up into here, you can start to see we're getting overbought signals. Then the dip down here on the lower time frame actually gave you an oversold signal. You can see a couple oversold signals here. Yeah, I mean, I like this, right? So market dumps. You can start to see the algos telling you, okay, we're getting oversold, like things are getting washed out. Same thing here, right? Here's a really good example. Market collapses. This thing finally tells you, okay, the down move's probably done at this point here. So and really you could argue that this is just another way to show those 3 thumbs kind of systems. So I'm not even quite sure how to do this, but if you want to play with this and add this, we called this the key special because he was super jazzed about this. But this is a fun tool. I'll throw this on a. In fact, why don't we go on to?
You think I can find it? And no, I don't think so.
Well, what I'll do is I'll go here. And then we'll go here, and then we'll go.
I can't find anything now.
One of these. Line script, trading view. Yeah, here we go. So you should have access to this. So that's the DI.
The main document, yeah?
Yeah, the first one's the indicator. The second one's the signals.
Mm-hmm.
We have Julian, Benjamin, and Brian's signaling system. Actually, this might even be there. And then why don't we put down here at the bottom, insert break. And we'll call this Keith Special. So if you want, there's that in there as well for you to play with. And really, you know, at this point, you know, I really don't like even talking about using scripts with the level oneers. I don't want them thinking this. I want them to be actually building the setups in their brains: location, divergence, structure, go, right? But at the same time, too, you know, I think it's important to acknowledge that there is, you know, a very big part of the trading community that loves algos, and how do you build algos to give you signals. And that's really what I wanted to impart in this module, is just to give you a nice framework. Number one, how do you build a script? You know, various different ways you can have the script report signals to you. And really, in my experience, the best way I've found to use algo signals is to layer them over multiple time frames. And I've seen a lot of professionals in my day go through this kind of process. You could build this like with a stochastic oscillator. I know lots of people used to do that. In fact, one of our level 3ers right now, he was on the daily brief today, Raf. He has there is a trading script, a trading view script, where you can put the weekly stochastic on top of the daily stochastic. And there's no reason why you couldn't use this signaling system to actually automatically tell you when the stochastic, the weekly stochastic and the daily stochastic are giving you the same signals. And it's the same logic as this. This just happens to be with Brian's crazy DI.
Okay, I think my next, very, very, very interesting, because I'm sort of start to understand this logic behind it. And I think my next two questions is sort of rendered useless. And then in the case of this, the next two questions was how to project profit. Is it on GAN 50 version, and how to manage risk? Yeah, from this picture, I would say. Yeah.
Well, again, the indicator itself is going to serve that rule number 2. And there are 3 rules to this, right? Location, indicator, which we can use the DI for, and then structure. So, and structure is about your risk, and then framing what kind of reward you want based on the risk that you're going to take, right? So, you know, like if the indicator is giving bullish indications here, I would look at price and I would say, okay, well, what kind of structure can I use to get long? You know, and really, I like the idea of risking against this low. So is this like a 61.8 pullback right there against that range there? I don't know. Is this a reload zone off of this range? Could be. Candle body lows, you know, Brian, he loves those as trade location. And then, you know, based on the fact that we're going to risk against these lows, well, that's sort of, if I'm going to be looking to try and be a buyer in here and risk against here, then that means I got to be thinking about, you know, a reward somewhere up in here, right?
Yeah.
And then also too, you know, kind of like what we were talking about today, and you can start thinking about this too, is For a trader, the ultimate objective is really to get that what we call the free look. So, you know, maybe you set 2 to 1s, right? Somewhere up in here, maybe 2.5 to 1s, 3 to 1, whatever is comfortable with you. Sell half of the position, then move your stop to scratch on the remaining, and then you got that free look, and you just don't know what the fuck's going to happen. Does that make sense? So I would like for you to be thinking about those free looks. See if you can start incorporate that thinking into your trading.
It's sort of like the bot when we got to the moving to Scratch. We can basically use it in any setup. Only the thing I found, I don't know yet how to manage properly if the risk reward is less than 3 to 1, like in the bot, or like on Crazy Irons setups. I don't really know how to use it. It's like,
as soon as you figure out how those setups work, you let me know, okay?
Yeah, I'm sort of I think I now I'm trying to apply it not only to Bitcoin but also to ETH, and it's not yet, but it seems it's not useless there. It might work there as well.
Okay. I mean, one thing you absolutely have to learn here, Andre, is there is a million different ways to skin this cat, right? And there will always be more and more and more setups that come along. I think as long as we think location, indicator confirmation, structure, go, you know, that's sort of the framework that we should work within. But, you know, whether your indicator is something like this, a cumulative overbought, oversold indicator that's telling you on multiple time frames that the market's oversold, or whether your indicator is, you know, like Bugra. Bugra has built this script that theoretically is everything all put in together into one. I don't know whether his indicator works or not. I really don't. But I do like the idea that it can fit into that indicator classification. And then finally, you know, structure is structure is structure, right? Try and find, you know, fractally heads and shoulders-y type structure. Try and find double bottoms, triple bottoms. Right?
Actually, the idea of hunting divergence here came out after you showed us what W's and M's are valid on DI index. So why we can hunt the divergence then?
The problem with the indicator though is it's very herky-jerky like this. You know, on a classic oscillator, you might actually have a very nice rounded top that identifies divergence. But in this case, you can see kind of like here, it just goes to a certain level and then stops. It's not really the best divergence hunting tool, in my opinion. So when you said divergence to begin with, I was a little, I don't know. I've never used it for divergence.
And confirmation of M and W's also so far looked quite juicy for me here. As soon as you confirm M and W, you can try to shoot.
You can definitely see M and W. Like that's the one thing about this is that you definitely can see the structure in this thing. No doubt about that.
And it's sort of endless M and W. This is what a bit scares me because it's always neither M or W, and you always can confirm one or another one, and I don't know where to start the structure because it's endless structure.
What I'd like to see out of you, Andre, is I'd like to see you actually plug in different indicators of your choosing. You know, this just happens to be off of the indicators that Brian chose to use for this particular index. But I'm not saying it's written in stone. All I've done is taken moving averages, Willie, MACD. I mean, that's pretty straightforward, right? It's not, is Willie the best oscillator to use? Maybe stochastic might give us better signals here. Maybe RSI might give us better signals.
It's another question in the list I have. Actually, I can't unfortunately copy it from the presentation, from the DI index class presentation, but there is a picture which is which have like a bunch of different. Is it mockup or it's another representation of index DI index, where is like 10 different indicators on one, like on the page number 5 of the presentation. Whereas, what does the DI include? The page says. On
yeah, well, you know, in essence, that is exactly what this DI is.
Yeah, but can we see it like this in this form, or it's just a mock-up? It's just all
no,
these
yeah,
indexes?
you could totally. All you got to do is just go in and, you know, I mean, we might blow the computer up here, but let's see what happens. But all you got to do is. Jesus, this thing's fucking all over the map here, right? Something big's going down. Where the hell is it? It's one of these screens. Nope, not over there. Let's try back over here. Okay, here we go. Well, I suppose we can do this. This is fine. So this is just the daily, right? So I've just highlighted that. And what do you want to see? I mean, I suppose we could show everything. Like I said, it might blow the screen up. As it stands right now, I think we're looking at the signaling system. So that means when we scroll down here, you see that everything else is commented out. Do you see how this is commented out? Plot DI index. There's two flashes.
All right.
That means this won't plot this. But we go down here, you see this line, plot DI slow by, does not have those slashes. Do you see that?
Yeah.
So
yeah, it's
as a result, this is going to plot this. But if I wanted to, for instance, I want to go and look at what the moving averages are telling me. I can come up moving averages. You see how it says plot? I can actually, they're commented out, but I can just go boom, 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 boom. Now watch what happens. I uncommented the lines, or I commented the signaling lines out, and I've commented the moving averages back in. So when I add this to the chart, now it's the study of the moving averages. Do you see that?
Okay.
Right now, if I want to see what the moving average signals are doing, okay, well, I can comment the moving averages out. And now I can go down to plot MA bull, the MA bullish bear line, right? All these different signals, right? And now I'll uncomment them. So now you can see I'm going to plot all the different signals. And now that looks like that. You see, these are all the different signals. So you have like the fast one, right? MA bull is the 6-period EMA is greater than the 13-period EMA, gets a reading of 1. If not, gets a reading of 0. And you can see that the color is white. So that's this white study. So you can see the white one, it goes, it was bullish, then it goes bearish, then it goes back to bullish, back to bearish, back to bullish, right? And you can see there's a blue one here that's constantly bullish the whole time. It pops out of bullish and goes bearish way over here. So what is the blue one? Oh, the blue one is MA bull 3. MA bull 3 is the medium term 30-period simple moving average is greater than the long-term moving average. So this must have been when the market was really bullish, came out of bullish, and went bearish on the medium term, right?
So it's a sort of system of booleans, right? At the end, we like.
All right. So and then if you want just to get crazy, right? We can actually see what this index looks like, what all of these multiple signals looks like in an index form. So we're going to comment out the individual moving average study, and we're going to show the index. So now when we add that to the chart, we get the cumulative indicator. See that? That's kind of a weird color. Let's change this to something you can see. Oops. All right. All right, and now you see that we have, here, let's get rid of this. Okay, so like you said, that slide from the presentation. In this particular case, here's the DI, and here's the DI signaling system. But in this particular case, we've added all the moving average systems. So there are the moving averages, right? There should be 3 of them on here. There are the respective scores of the individual moving averages, and here's the index reading of those scores. Make sense? And you can do this for all of them if you want, just like that slide shows you. That we just went through the moving averages. We could do the whole thing now off of Willie, right? So here's Willie's, all his different indicators, right? There is Willie himself. Why don't we put Willie himself on there? All right, so now, and this is why I said you could blow up your computer. Now we've put the Willie on here, right? And we could go and, so there's the moving averages, all the moving average scores, the moving average index. There's the Willie. We could put on the Willie scores, and then we could put on the Willie index. That make sense?
Yep.
That answer your question?
Yes. Yes. Exactly. Yeah. Okay. Okay. Unfortunately, I don't know why I can send it from my mobile, but does well, it's the same numbers, I believe. You have now DI index and then bunch of numbers on each indicator. Yeah. On each. Yeah. And I think we receive them by SMS when we receive SMS from TradingView.
Good.
Do we make any? I mean, can we use any use of it?
I've set up alerts, right? We could have very easily an alert here that just simply says, "Tell me when these cross bearishly." Right. So I don't know. You probably could set up SMS alerts. But, you know, like I could actually even just, you know, set that to sort of the midpoint and then just go.
Yeah, it's sending an SMS and receiving it. And there is a bunch of numbers there.
So you see here, we can actually do the slow crosses the horizontal line. We can actually do here we've got.
Yeah, okay, yeah. Here is the number.
Across the slow cell. Yeah, you can even get it. It can send an email to SMS here.
I'll send SMS. Yeah.
So you can do SMS, right? Look at that. It's even got it. You can put your phone number in.
Yeah, that's what I did, and I receive it, and I receive the message, yeah, the message, and then the message we have numbers, and basically numbers are just parameters for embedded.
Well, it's going to be the message
moving averages, yeah.
It's just going to be a numerical representation of whatever the hell this all is. So here you can see condition DI index 3.1.
Yeah.
And
and then
3.1 and 3.2. 3.1 here, that's referring to the top index, and then the bottom one is 3.1. So I might even say that. You see where it says DI slow by. Now, it's going to give me just it should, in this particular case, it's crossing, but you can see cross up, cross down, greater than, less than, moving up, percentage it's moving up, right? So you can set a whole bunch of different alerts. You know, the easiest one, I think, is just to tell you, and, you know, this is where the cumulative would be really helpful, because it would be really cool to get the message when all 3 time frames that you've chosen all are pointing the same direction. That would tell you that, okay, things are ready to rock and roll.
Cumulative, you mean we can't receive like...
This is just going to tell me off of this time frame. And this is the problem, right? Is how do you, and you can see, look at the message that it's going to send me. Remember you said you got a whole bunch of shit?
Yeah.
I mean, technically, you could in this message box go, buy this fucker now, right? You can type in here whatever you want. But did you see how the default, it was all that message, right? All this,
Yeah.
oh, I can't undo that. I'm screwed. I always cancel that. So, I mean, you can, and really, this is beyond me. I'm not really that, and I think I told you, Julian actually built this strategy tester. So you can go through and you can create back tests to show you how profitable the trading systems you built are. I've never really dug into this, but if you ask Julian really nicely, he might do a session with you to show you how to set all this up. If this really appeals to you. I suppose you could argue that, that Bugra guy with his Telegram group and all that kind of stuff. In essence, that's basically the same thing that he's created there. I suppose there probably is a way that you could have these fed through a Telegram group.
But the DI index doesn't show the same what Megalodon shows. I mean, I'm a bit scared when you've been saying, as soon as you have followers, it might bring some troubles, blah blah blah. Yeah, okay, but does it mean what his bunch of followers will be doing the same what DI index showing? The mice might doing the same what DI index showing? Sort of.
I can't comment on his script. I honestly don't know. All I'm going to say here is, like I said before, when you get these multiple time frame signals off of the DI, like I said, this is just daily. But if you can get daily 4 hour and 1 hour, I find work really well. If you can get these multiple signals all telling you the same direction, extremely powerful. So it is interesting how the daily has perked up here right away now. But you can see the 4 hour is still bearish. It's trying to turn bullish. You see that? So it's trying. And then the hourly, it's still bearish. So what that tells me is, and you look at this. Does this look like a wedge? Is it completed a wedgie type pattern? I don't think so.
No.
We have the down, we have the up, and you can see it's going through the process. And my hunch is, if this thing is for real, then we're probably going to, back and forth and then break out. So there probably will be some sort of structure to this. But I think you just got to be patient, right? We did have the hourlies pointing up here, but the 4 hour just wasn't ready. And you can see the 4 hour is still trying to clean itself up. And that's fine. I mean, I think I showed you guys before, when this thing coils and it spits up the 3 thumbs, they're extremely powerful signals.
Yeah.
But they come every day, right? You just got to be patient. But that's the best way. I'm not even thinking about hunting divergences on these signals. I'm not thinking that at all here.
Yeah. So you don't replace with it anything. You just add it. You just add it to the tool belt.
If you are interested in trading this system, like I said, try and build the multiple time frames, and then when the signals on all time frames all agree, that's when you want to get super jazzed. And what you're going to have to do, Andrey, is work with this for a few months, and you'll see. After you go through this and you see the 3 thumb signals come in, they'll speak from themselves. We were expecting an important phone call here, so actually, let's answer this.
All right.
One second. Hello. Okay, sorry about that.
It's okay.
Well, look at that. It is the top of the hour. Son of a bitch. And it looks like Mr. 3 o'clock is here. Wow, look at all this. Oh, Jesus. Oh, did I do it again? Did I? Oh, I tweeted this out live again. I was wondering why there were so many people watching this. I was like, what the fuck? Okay, well, anyway. Gonna hop here. All you freeloaders, this is what we do in our school. So if you want to quit freeloading, maybe sign up and for the site and quit being freeloaders. I was just wondering, why the hell is there like 20, 30 people watching this? I was like, did he post this somewhere?
All right.
Anyway, I hope you had. I hope you enjoyed the tutorial, and everybody and their brother got to watch it today too. Sure, there wasn't anything incriminating on the on the tutorial. All you freeloaders, you're all just a bunch of freeloaders. All right, I'm going to end the broadcast there. I hope all you freeloaders enjoyed this. But level 2ers, get to work. You've got a whole bunch of scripts to work with. And I got to hop to my next tutorial. And hopefully next one I won't make public. All right. All right. Talk to you later, Andre. Bye now.